Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need to cop it, I wait for him to drop it. Ain't no option, let's get it popping. We chilling in the drop. I need some crypto, put it in my pocket by any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey, you talking to the Prophet?
It's all fake news. It's phony stuff. It didn't happen.
Buenos dias, Jerry. Buenos dias.
Buenos dias, mi amigo. Wow, the música es bueno.
Oh, gracias. Okay, let me do the hellos real quick. Let me say hello to Biotech Breakout, Scorpion, Gordon Bennett, Joe Pirate, CC Brown. No, I didn't sleep in. I went and did cardio, and I went to get coffee, and this hot chick came up with her dog. What am I going to do? Just go instead of pretending to play with her dog? I mean, come on, people. Wise up. Good news, everyone. Bill Cosby's out. Whew. It's another win for creeps. George Gammon had a tweet. He said, if anybody knows a good lawyer, blah, blah, blah. I said, why don't you go find the guy that got Bill Cosby out? Because he can pretty much, he's a magician. Okay. Let's see. Who do we got over here on the YouTubes? We've got Ella Paul, Michael, Bitcoin Candy. Scott Hill, I get that a lot too. That was actually another person. Demayan, P. Kelly, Johnny Midas, Nesh, JD, and Michael across the pond. What's going on? Jim, Cassandra. So hello, everyone. Those of you that are here, we got Jerry in the house. And what's going on in your world, Jerry?
Well, two things. One, I didn't get a notification on my phone about your show, which leads me to wonder, is this a different YouTube channel? Are we on a different YouTube channel?
No, it's the same one. But if I don't do it enough in advance, I think I did this. I set up the show at like 8:15. Normally, I set up the show at about 7:45. So most likely, by the time the show's over, you'll get a notification.
Okay, great. Okay, so we got that cleared up. The other thing is, I have been, trying to be intellectually honest with myself and emotionally honest with myself. And what I'm coming to realize is that the expectations that I placed when I started really making my bets, like when it transitioned from dabbling in crypto, like, kind of reading a little bit, following a YouTuber or two and putting a couple dollars in, to actually making the full blown commitment that this is where I was going to be and this is where I was going to place my real bets. The timeline that I had placed on a result aren't coming to fruition. And I'm realizing that intellectually, I understand a lot more now than I ever did before, but that doesn't take away the emotional expectation I had of being able to buy my property, build my house, roll out my dreams, so to speak. And so there's this bit of acceptance that I'm, and the acceptance that is needed is contrary to my desire. And so I'm wrestling with that. And I don't think I'm the only one. I know there are a lot of new people that have kind of started tuning into us on YouTube and Twitter and things like in the last year. But for those of us that have been around 3-4 years, it's feeling like it's becoming a grind again. Like for the first 2.5 years, grind. And then we had that beautiful last half of 2020 and the beginning of 2021. And I was like, okay, This is what all that grind was waiting for. And now we're right back in grind again. And it's like, how long are we going to grind? Uh-oh. Are you muted, Mike? I mean, Nick?
I don't feel like that exactly. I feel like we were given a stay of execution.
Okay.
So I feel like, well, maybe it's not even that. I feel like we were given another bite at the apple.
Oh, okay.
So we saw the run up in 2017 and then everything sold off. And a lot of people were like, that's it. Those people are stupid and most of them are gone. But for those who stayed and then saw the 2020 build up and then early 2021, and a lot of that, probably 50% of those gains were COVID, were free money, idiots on the couch, all that kind of stuff. And that will unwind over the next few months. And then we'll see what the real market looks like. And I still think it will be way better than it was this time last year. Meaning we know where it's going to go. We know that this is happening. We're hitting that kind of South American spring, or, you know, it's not the Arab spring, it's the Latino spring, or whatever they're going to call it, where all these countries, even if they're not accepting Bitcoin as legal tender like El Salvador endeavors to do, there'll be different versions of that. Like Paraguay, they're saying, listen, we're not going to make it legal tender. That's too big a hurdle. But we can make these iterative steps where banks will allow you to custody Bitcoin. You could agree to settle a debt or to initiate some kind of debt in Bitcoin terms if both parties agree. It won't be enforceable. You can't make, but anyway, that is to say,
how about the simple on and off ramp things that'll happen with, yes, you can go ahead and connect a Binance international account from your Costa Rican bank, or a Coinbase International, or a KuCoin, or whatever, connected to your bank. And now all of a sudden you have that virtuous circle, right? Where your fruits of your time, which we call wages, can start to translate into investment opportunities via this incredible thing we call the global web.
Yeah.
The internet.
So I think as this builds, you know, we've been given like we have a crystal ball. We all get to look at it. We all know exactly what's going to happen. We just don't know the timeline. But we know that this is going to happen at, you know, slowly but surely. Even you starting to even have senators and congressmen that are getting on board at some level of crypto to make the Brad Shermans and stuff look even that more idiotic. He was saying, I think yesterday he was making some statement like, we need to turn off crypto. God.
Yeah, him and Elizabeth Warren, it's like, you know, when it's that, how dangerous is just a little bit of information, right? Just a little bit of information is extremely dangerous in the wrong person's hands.
And they're so glib when they say the things that they say, and they're so self-important. It's like somebody getting up, you know, in front of a bunch of, you know, PhDs in the science lab, and they're like, turn off gravity. Like, what? That's not how it works, you dumbass. But anyway, these guys are going to be who they are. And sometimes really dumb arguments are actually great, because even people that don't have a lot of understanding of the crypto space look at really dumb arguments and go, oh yeah, that's dumb. He's an idiot. It's like Powell allowing other countries to move forward with digital currency. Oh, you're going to let him? You're going to let that happen, huh? Like it's his choice.
How gracious of you.
Yeah, I'm going to allow the sun to rise tomorrow. Thanks, Jerome. So whatever. These people will say what they'll say, but we know I believe it's pretty obvious what's going to happen over the next few years. And even if that timeline is 5 years instead of 2 years, or 7 instead of 3, or whatever, we still know it's happening. So as long as we're buying quality assets, we're doing research. I mean, we have the one get out of jail free card that the next 5, 6, 7 generations may not see, depending on how long generations are, depending on if we last forever. Maybe this is only generational money because we get to the point where we all live inside the box and we have some transfer of consciousness in some continuous way, and our meat suits are plugged into some like machine that just jabs us with electricity once an hour to keep us alive for 190 years. And then maybe we do but otherwise, short of that, I don't see a new asset class arriving in the next, few generations.
Sure.
So for us, to build some generational wealth, I don't think there's any other place to go.
No, I agree. I totally agree with you on all those points. And I guess part of it boils down to at what point, like for me, and I'm not probably typical, right? But for me, and I know you are a lot like this in that you are willing to live well below your means now and have been in that kind of routine for a while. Truth be told, your net worth, you could live a much higher lifestyle.
I could live a much different life. Yeah.
You could live a different life. And I could as well. The point is that how long am I willing or committed to continue on this kind of living like a pauper? At what point do you factor in quality of life versus goals and expectations that you have? Because my expectations and goals mean I need to continue to live like a pauper.
Well, I have an answer.
Okay, I'd love to hear it.
I know when, and I'm going to answer it right after we get back from these non-commercial break. Okay. So here's what I believe. First of all, let's get some cool little background music going. Okay. Here's what I believe. Remember the capitulation a few weeks ago in crypto where there was massive essing in your pants panic? And
I remember it well.
People were starting to say, what if this is the end? You saw the dumb articles come out, 12,000 Bitcoin. It's in the cards. 3,000 it's in the cards and all this kind of stuff. And again, I'm not price predicting. Anything is technically in the cards. But we had peak depression, right? The opposite of peak retard. We had peak retard in 2017. We had peak retard for, I'd say, 2 months straight in the beginning of 2021.
Right.
And then as we fell off of peak retard and most of those idiots went back to YOLOing and to GameStop and all this kind of stuff. And, the dumb coins came back down. And then even some of the better coins, they came back down because the idiots left the market. But then we went into like 3 to 4 weeks of straight. Every weekend was red. Every single weekend, Bitcoin went down. Every weekend, people, oh my God, today's the day. That kind of panic that I was getting, the phone calls I was getting, like, where are you at? I'm like, I'm fine. I don't leverage. Oh, so, but the people that were leveraged got blown up. A lot of people gone. They don't exist. You see, there's a lot of people that aren't in the chat anymore. They don't join us. Maybe they took leverage. Maybe they got stupid. Maybe they got irrationally, whatever. Doesn't matter why. We need to see that in the equity market.
Uh-oh.
I think we need to see peak panic. We need to see capitulation even among the stalwarts in the equity.
How does that happen, though? How does that happen when we know that we have central planners, financial, we'll call them central banks and shit like that, that are willing to backstop what we would call less than desirable equity?
Well,
how do we achieve that?
It's a good point. Two things. One, IQ, aggregate IQ. Two, we know that central planners don't really do any of those things. They intimate that they will. They talk a big game, but they don't actually really do those things. They just try to convince the market and the compliant rube ass media that they do those things, and then people buy into it. And that gets back to part number one, which is a lower investor IQ. Would you say we have a higher or lower investor IQ in the greater investment space now or a year ago? Lower IQ now or lower IQ a year ago?
I'd say lower IQ based off of what I see on social media.
Yeah, me too. I think we have a way lower IQ.
I mean, all you need to rationalize or justify Nick's statement is go look at Barstool guru knucklehead Dave Portnoy. Follow that guy for 5 minutes, and if he and look at his following, if that doesn't tell you everything you know about the investor IQ dropping precipitously, then nothing will.
So if we believe the aggregate investor IQ is lower now because of a variety of factors, because people are sitting behind their phones, there's still a lot of people we know all the reasons, right? But it is what it is right now. Now, because we know that, what also goes along with that? Do you think they even understand what the Federal Reserve is or what they do? Do you think they understand what central planning is? Do you think they understand what bankers are? Do you think they don't even understand money creation? They don't understand repo. They don't understand funding. They don't understand Fed funds. They don't understand anything. They really don't understand anything. They're just going with the herd. And that's kind of added into that passive indexation kind of effect that Mike Green talks about all the time in a very eloquent way, and he's accurate. Mm-hmm. So we're getting two things at once: a bunch of compliant rube dummies entering the market, chasing off of just news and tweets, chasing assets because things only go up. And you also have a passive indexation effect in the greater markets where people are just putting money into funds. The funds are equally distributing those monies into assets. So it's always buy side, buy, always hitting the bid, no one hitting the ask, until these same rubes go the other way, or one person panics, or one person has to start paying rent. And then it goes the other way. And when it goes the other way, it'll go the other way with the idiots first, right? They were the last to the party, but they were the most vigilant. They will exit just as fast as they came. They will probably panic even faster. The only thing that will slow them down is that some of them may not actually know how to make a trade and sell something. They might not actually know how to sell, but they'll figure it out because they'll go to Reddit. So
I agree. I agree with that. I think, and if you looked at a number or quantity standpoint, the volume or number of investors is much larger in that segment that you just talked about, but they don't represent anywhere near the fraction of dollar volume. Dollar volume
right.
is still hedge funds,
yes.
pension plans, this, that, and the other thing. And I honestly believe at the core of all of that is this whole premise that all those entities have had to go farther up the risk curve because there is no good quote unquote bond market anymore. You cannot have fixed income give you an income anymore. It doesn't exist.
Right. But Kerry,
that's an important part of the market that used to be there.
So carry what you're saying forward. So when all the idiots start to panic out because they don't have the free money anymore, and most of them have not made money. You hear all these stories. Most of the Wall Street bets community, the Reddit mafia, they have not made money. They've been late to the trade and stuck holding the bag on all of these assets. So at some point they exit, and that, I think, starts a greater exit, the other side of that passive indexation effect, where the aggregate buyer in the market, you might say the only buyer, becomes the only seller, and there is no buyer of last resort.
Okay, that would only make sense if there was a place to exit to.
No, I mean, just exiting to cash.
Brilliant idea.
Well, yeah, but do you think your average Reddit investor investing through Robinhood, do you think that they have a game plan for when their asset starts going down? Because stocks only go up. That's what Dave Portnoy says. They only go up all the time.
Right. No, and again, back to although that crowd, we'll call, okay, for terminology, the Reddit crowd does represent a high number of members, but relative to the dollars involved here, a relatively small number of dollars. It's back to the folks that have real skin in the game, real money. I mean, hundreds of millions of dollars, sometimes billions of dollars, farther out on this risk curve because there is no fixed income market anymore. There is no.
Yes, But Jerry, if there was balance in the market, yes. But we are teetering on the very far edge, that 40 to 45% passive indexation edge, that cliff, where if the net buyer, even by a few percentage points, becomes the net seller. Remember, it sells off equally as in the same way that they buy equally. So in an ETF, when you buy into an ETF, they take your dollar and they spread it out into the assets they've chosen. When you sell, it sells evenly also. And so when those net buyers are the only buyer left in the market, they only have to be pushed up by a few percentage points by the idiots. When the idiots leave and that thing teeters, now we become even just barely net sellers.
I see what you're saying. So A affects B, even though A, the Reddit crowd has a small portion of dollars.
Yes.
The sheer fact that they do represent a portion will therefore, if you in the dynamics of ETFs and the way that funds come in and have to go to A, B, C, D, and E.
Yes.
If it goes down the other side, then they have to withdraw from A, B, C, which could create cascades of other downstream consequences or effects. I get that. I understand that.
Net aggregate selling, debt downgrades, which means unwinds, which means ending the whole, buyback hustle, and all these things could unwind together. And I think you could see all of this stuff late September, October, like a depth charge in the equity space. And my guess is to front run that about late August or mid-August, they're going to start talking about another stimulus package.
You know what? I am thinking, we're on the same page, only I come from a completely different starting point. I think it's going to be because of, what terms have you used? Rent-a-gettin'?
Rent-a-mageddon.
Rent-a-mageddon. I don't necessarily think it's going to be market-based. I think the administration, Biden's administration, is going to look at the landholders, or what we'll call landlords, and the consequences there within, because that is a monster can of worms that I don't think anybody has prepared for, because you don't hear them talk about it. I hear you talk about it. I hear smaller entities talking about it. I don't hear Kamala Harris out there saying, we've got to protect the one element of the middle class that's still intact, and that is homeowners and property owners and landlords.
Yeah, well, landlords, they got crushed. In California, they're saying, well, we'll just cover them. We'll make them whole.
How can an insolvent state do that?
Well, they'll just take the 100 billion. I think they said they have 76 or 72 billion extra and another 20 and change, which who knows what that money was for? Most likely roads, cops, firefighters, medical, stuff like that you really don't need. And then they're going to make the landlords whole, which is good because the landlords got screwed in all this. But at what point do we take our lumps? And then you start to go.
Exactly. Isn't that what it? Okay. So when you buy a piece of property and you build on it to live in it as a home, that's one kind of investment, very small. You buy an already existing home, renovate it to rent out to somebody else in hopes that you're going to get a return on a monthly basis, call it rent and investment income. Those are all investments. There used to be a day when if you took a risk, and it worked out, you got rewarded, but the risk was there on a downside. We are eliminating downside risk. It's been eliminated in the stock market. It looks like what you're talking about, it'll be eliminated in the real estate market. And it's just us sitting here in crypto that actually have real downside risk. Everybody else, no downside risk. Don't worry about it. The market does just keep going up.
And so, but I do think that unwinds, but I think it takes a combination of things for it to unwind. I think if we mix in some Rent-a-mageddon, if we mix in some people being forced off the couch, if we mix it, and there's some data to show that in the states that have ended the extra pandemic assistance checks, just I think the 300 a week extra or whatever, in those states, new filings have gone almost to zero.
Oh, you mean it starts becoming more profitable to actually go back to work?
Yeah. And so because of that, what does that tell you? That tells you two things. One, people do want to work. Two, that $300 was the reason that a lot of people would be solvent or insolvent. So you could dig into that further. If you wanted, you could say, listen, if $300 a week gets the average American back into the workforce, if $1,200 a month does, that means people are $1,200 a month away from basically being insolvent. Because if that was enough, if $300 a week is enough to force you back into the workforce, that means people are on a razor's edge.
I think we've all known that. I happen to know people, friends, I call them friends, who are 2 months away from homelessness. You know,
everybody's
that
2 paychecks away.
That old paradigm that used to be the mantra of have 6 months of your working capital in an account, emergency cash, have that. That's been squeezed out over the last 20 years. You know, think about it. The audience, be honest. Is there a way for the audience to do an anonymous poll where they won't be identified? Because it could be kind of embarrassing to on live YouTube go, yeah, I'm basically living paycheck to paycheck. Is there some way you can do that? Is there a poll thing you can set up?
We know that the average American is basically living paycheck to paycheck because I think what was the average savings was $400 leading into COVID. Now, household savings have gone up in certain sectors. And it's like saying, where is the stimulus money actually ending up? Wealthy people got wealthier. Weird. That's weird. I guess they needed it most. And $300 a week will push people back into the workforce. And so that one little thing right there is very interesting. Now, there's still more data coming in. There's only a few states that have gone off of the pandemic unemployment incentive insurance or whatever, PUA or whatever they call it, PUA. But as more states come off and those initial jobless claims drop in those states, and everybody's like, yeah, people are going back to work. Then the reality comes back. Oh, wait a minute. There's 15 million jobs that don't exist anymore after COVID. That has not really been factored in. All people want to talk about is lumber's more expensive. So what happens when those log jams are basically reconciled? The economy is turned back on and there's still 15 million jobs gone. Who's going to pay for them? So UBI, in one way or another, I mean, you could say that unemployment insurance is UBI, right? But expanded in unemployment insurance, they're going to continue to expand it, I believe, and it will get bigger and bigger, and it will touch everyone. And so then that's even more of a reason that pushes us all back to Bitcoin. At first, I think there'll be some real big chaos in the equity space when people leave and we have some panic and some chaos. And that too will settle and it will abate. And my guess is, end of September, October-ish, maybe going into early November, that gets reconciled. And then the reality is going to be, when is inflation coming? So when does actual inflation, outpace deflation, meaning the jobs that are going away? And do you end up creating inflation by subsidizing the people that deflation has fired out of the workforce and replaced with robots? So once the deflationary forces are kind of made whole by central planners, politicians, and idiots doing their best to create currency units to subsidize all those people that no longer have jobs, when do they go too far and when does inflation actually show up? Because I do believe inflation comes at some point, but not anytime soon. But again, they're only 1 or 2 clicks away. The first step, I think, if they did something as simple as start to eradicate student debt, then it's coming. Then we know they will stop at nothing. Because how would you feel? We even talked about this yesterday. How would you feel if you paid off your college debt? You're a doctor, you paid off your $290,000 loan, and they go, we're just erasing college debt for everyone. You'd feel like you got screwed. You might be a little hangry. And so then what do you say? Well, debt destruction That's money creation. That's money that was going to come back to the economy. You just wipe that out. And most people, especially, millennials, not to pick on them, but if you wipe out their debt, do you think they're going to take that as a win and be like, yeah, no more debt. Now I'm debt free? Or are they just going to go, well, you just wiped out $80,000 worth of debt, meaning I can go spend $80,000 more and be right where I am right now. So that
might actually be net positive from a GDP type standpoint.
Yeah, I think it will spur spending. I think and so at some point, I do believe inflation comes, but the pile of money that would equal inflation, fighting for products and things like that, that's not as a result of an expanding economy, because we're not talking about that. We're talking about a deflationary environment probably for the rest of our lives as robots do more and more and computers do more and more and VR gets, anyway. So if we think that's the basic story, the base case is deflation, when have they printed so many currency units that they've actually counteracted all of the deflationary forces? And then
the new big deal, who was it? Hoover, President Hoover. That monster infrastructure package at the end of the Depression, where it was just basically, if you want to work, we'll hire you because we're going to build roads, we're going to build dams,
or something.
And you know what? Here's the thing: all those things are needed. It's not like they're not needed. I mean, I don't know how many potholes you drive over in Sherman Oaks, but there is a large part of the United States, and especially in wealthy areas in California, that have, breaking down, degrading, old, in need of repair infrastructure, whether it be roads or bridges or power, power creation with new means, whether it be solar, wind, hydroelectric, etc. These are all things that they could throw gazillions of dollars at and put everybody to work and retrain them and da-da-da. I think they'll do something like that. I don't know what it'll be called and what it'll look like, but I see that coming.
Well, I consider myself the everyman. And I was driving, me and my buddy Dave were driving a McLaren last night, going down 101.
Like everybody does in California.
Like everybody does. We were going down 101 to a vampire party in Hollywood. And we were driving down, Highland, and we turned onto Sunset. And there was some bumps in the road. And I'm going to be honest with you. I had it on track mode. I actually had to switch it back to normal suspension mode so that it would be a comfortable ride. So I know what you're saying.
The cross you bear.
It's not. So for those of you that think it's easy, it's not. I had to actually switch from track mode to normal comfort mode.
Oh, the sacrifices we all make.
So anyway, the long story short is I believe inflation will come at some point because we have a bunch of people that just can't accept that things don't always go up, and they're going to just continue to do whatever it takes for the appearance. And that's why Bitcoin, if you reduce it all back, because Bitcoin very loosely monitors or tracks bad behavior. It's almost like it's a proxy for bad behavior. If a government prints stupid, we'll do it. If they give ridiculous loans, if they slash debt, if you get caught cheating, this, that, blah, blah, blah. Bitcoin seems to track bad behavior. And so if it does, that's why when you hear Plan B saying we're going to, 10 million of Bitcoin by 2029, he may not be wrong. But then again, we also might be going to $75 a banana by 2029.
Well, you would, not me. I'd just go outside and pull them off the
and
tree.
Pick one, and then only be $40. And it'll only be $40. All right, let's do this. Let's go over. Let's look at the charts. Oh God, look at us. We just went on and on for so long, which is fun. Anything exciting in the prices? The Bitcoin 33.2. It's down. It's been down 2 days in a row. I'm hoping it goes a little bit lower. I'm going to resell the 32s that I bought back 2 days ago. So Ethereum 2095, it's down just a hair, but it's doing pretty well.
It is. It's amazing to see. I'm actually glad that I was able to take advantage of that other bite at the apple that you talked about. because I substantially increased my Ethereum position by 200%.
Yeah, you did quite well. The Cardano $1.33. Alonzo's coming. It's up. It's one of the few assets that are up. Polkadot is up just a hair, 15 and change. Let's see. Matic actually is not. It's kind of flat, down for the week, down for the month, but it had risen so fast. Can't really hate on it. The V chain, that's kind of up. We'll give it a little hair. Let's see what else is interesting. Telcoin's gotten some news. Engine token is releasing. They just did a token sale for a token called EFI, which is Efinity, which is a token that has to do with non-fungible tokens. Non-fungible token. It was on CoinList, which is a dumpster fire site, but they raised $20 million, I think, in 2.5 hours. So, NFTs are dead. Long live NFTs. Near token, 10% up. I'll take it. I still think Near is unloved. Low market cap. We're below $1 billion. Love it. Nexo.
When is it going to come to Coinbase? When is it going to get some exposure? I think that's its biggest issue. That and marketing.
Well, Coinbase is going into lending. They're starting to get into lending. They're starting to get into paying, something between high yield and acceptable kind of return on held assets like USDC, I think is the first one they're doing. I also think, this is kind of a side note, I think USDC is going to end up taking more and more market share from USDT. I think the government is going to continue to put the screws on those guys. I think USDT, probably in the United States, its days are numbered.
Well, let's hope so.
Yeah. And for those of you that are holding USDT, switch it to USDC, because if there is some iron finance type unwind where people really panic and really have to hit the exit, you don't want to be the last one sitting with Tether in your account. So
remember, it's not the US dollar.
It is not.
It is not the US dollar. You need a buyer to buy your Tether from you. Exchanges will not buy your Tether from you. That's good advice. Get the heck out of Tether.
Get out of Tether, man.
Can we answer Sebastian's question before we go to Gert or Nexo?
Ma'am.
I think Nick would be an excellent Texas Hold'em player.
You know what my
I think you
problem
would
is?
Because you understand gameplay, right? I mean, game theory. You understand math, right? And you have enough of those two skills to put together and assess your opposition at the table.
I'm such a poor loser.
Oh, well, there it is. Because sometimes there are many times you do everything right and still lose.
I'm such a bad loser. It makes me good at investing because I'm real good at doing enough research. Well, at least for me, to where I feel confident about an asset and no one's going to shake me out of it. Right. So I'm really good at doing what it takes for me, maximizing my own, like the line of sufficient, but I'm really bad at accepting a loss. Like
then you wouldn't like poker, because the truth of the matter is, to be a profitable poker player, you're generally never more than 60% win rate.
Yeah, that's not going to do it for me.
Well, it's just the nature of the game.
Yeah. So yeah, gambling, and I can say I don't gamble and have never gambled. I also don't drink, never drank, never been high. Because it's like, why would you?
I can't say any of those things.
I'm like, don't rock the boat, man. So anyway, just real quick. So I have this theory about Near. My theory is, as Coinbase converts to looking a lot more like a bank, and you're going to start seeing all of these platforms look very similar. Coinbase, Nexo, Celsius, which just got into mining. They have a $200 million investment into the mining sphere. They're going to be sharing mining rewards with their members. They didn't say how much. They always leave it nebulous. No one at Celsius likes a direct answer to a direct question, but I do like the way they're thinking. I don't like Alex Machinsky, but I don't think he's a crook. So let me just caveat that. I don't like CZ, and I do think he's a crook. I don't like the Sam Friedman guy of FTX Exchange. I feel like he's probably a crook also. I don't like so
Do you think Coinbase takes on Near and the developers that are working on Near, and Near starts developing actual FI products, DeFi products for Coinbase that are exclusive to Coinbase?
And it won't just be Near, but I believe between Near, which will eventually be listed on Coinbase because it's Coinbase Ventures A16Z, and 1inch. A 1inch is doing a lot of innovation right now. I believe in a couple of other of their early investments, I think they're going to try to basically become some amalgamation between existing banks and exchanges. And I don't think exchanges in the traditional sense, because already, you know, if you're an exchange, you know, decentralized exchanges are coming for you. If you're an exchange, you know, swap platforms that can get lower fees are coming for you. The only reason,
just look at 1inch, Uniswap, Pancake Swap, and
Yes.
I mean, just the sheer dollars involved speak volumes to that point. You're right.
And so you think, okay, if they can figure out the fee problems, and that's just using these other protocols. Once they start using Matic, you know, with Polygon, once they start using Cardano, Polkadot, Near, then all of the problems, all the fee problems with Ethereum go away. And then these swap platforms are 100 times better than an exchange, right? For the person that's actually buying. Now, for the idiot, they're just like, go to the blue Coinbase, buy your stuff, don't worry about the fees. But for the more seasoned buyer, they're going to want to just swap. And then you say, wait a minute, if these swaps are so easy, what does that say for the banking sector? I mean, if I can swap between currencies and crypto representing currencies, as long as they at some point give me a credit card or even just a digital credit card like Apple Pay, why do I even need a bank account at all? I mean, if MetaMask had a credit card function and I could keep USDT and USDC there and convert it to USDC, and I have Nexo, which is sending out credit cards, by the way, and I can keep USD, actual US dollars there, and get 14% return, special teaser rate, or 12% or 10%, or anything over 0.5%, why the fuck would I ever go to Chase, WAMU, Bank of America?
You've got to get your US dollars into the cyber world. It's the on-ramp.
It's the on-ramps.
It's the on-ramp.
And so I
So
wonder.
when a DEX figures that out,
Yes.
oh,
And what if, yeah. And so that's what I'm saying. That's the piece that's missing. So if Coinbase,
but is it missing? I don't know if it's missing. I just don't think it's been rolled out yet.
So
like
what you need,
all that stuff Cardano's doing with digital identity, because that is the only barrier of an on-ramp is your KYC AML. That's it.
So here's what I think.
Eliminate that. Boom, you're direct on.
I think Coinbase, Kraken, I think they roll out public-facing, very small footprint retail banks. That's your on-ramp. They'll put a few of these in specific locations. They'll have an actual place where you can go in and talk to a robot, probably. You don't even need humans. It can be like the Amazon stores that you go in and you just shop and you just leave and it charges you. There's no humans that work there. You could have a retail, like a pop-up bank, right? You have these pop-up stores. You could have a pop-up bank for Coinbase, for Kraken. That's your on-ramp. You don't need Chase, Bank of America, any of these things. And I think that's game over. Because if you are sending money back to your family, like, for instance, any of these immigrants that work in California or Texas, whatever, and you're sending money back home to Guatemala, El Salvador, Costa Rica, you're sending money to your family. And you're paying sometimes up to 50% fees to use Western Union and all this kind of stuff. You're even paying 20 to 30% fees just going through Chase and all that because they charge a fee. The middlemen charge a fee. The recipient charges a fee before you get the actual money. Before 10 days later, maybe your family gets some of the money. They get charged a fee if they want to get out in cash and all this. That whole industry goes away. How powerful would that be?
It'd be powerful to everybody except for the $12.95 employee at the Western Union window.
Deflation, bitch. Booth was right, man. So it's just kind of interesting. But I think you nailed it, Jerry. It's the on-ramps. That's the only thing that's missing. Or it would behoove everyone to use these digital banks.
And I think you'll see that, with this programmable element of smart contracts and oracles and things of that nature. Somebody is able to figure out the decentralized AML KYC link, then the only other element is what we would call on the backside the taxation element. They've got to, if you can legitimize it with the upfront KYC AML stuff, and then provide its quote unquote value to taxation rollout, then you'll get no opposition, right? As long as they're getting paid.
Yeah.
But those are the biggest elements right now. I think that until you can solve that problem, it's still going to be, kind of us on this pseudo dark web journey to, quote unquote, pseudo anonymous. We're not anonymous, but pseudo we are, in some kind of weird way we are.
So let's do this. Let's switch gears. We've waxed philosophic.
Loss aversion bias. That's me. I'm that guy.
It's the only one we're going to do today. We're going to take our time. We don't need to rush through this, but today we're doing loss aversion. And I'm going to read it, and then Jerry and I are going to talk about it. And we are going to give maybe an example of when it might have happened in our lives. So let's see. Is this a long one? No, it's not long. This is a 3-pager. It's not bad. Loss aversion. The disutility, inconvenience, right? So that's what you have: utility and disutility, convenience, inconvenience, right? And just word this in a way that makes sense to you. Okay. So loss aversion, the disutility or inconvenience of giving up an object is greater than the utility or convenience or value associated with acquiring it, right? That's like saying the pain of a loss is more in points, in negative points, than the win is. So you win a football game, you have like a +1 of happiness. You lose a football game, a -3 of happiness. So it's not even. Losses are felt much harder, right? Essentially, the pain you get out of a loss is much more dramatic than the value you get from a win. Okay. Example, amateur investors will often hold on to a bad investment or position instead of selling at a loss and putting the money towards a better investment. In investment circles, this is also considered risk aversion, or your willingness to accept risk. And you have to go, before you invest $1, you have to explore this with yourself. What is my personal risk aversion? I have to do this with all my clients. What is their risk aversion? I can't just tell them buy this, that, all kind of crazy stuff that I've got, because they might not be willing to deal with the amount of stress that is involved in those investments. So I need to know what their aversion to risk is, or their risk tolerance. All right. Boil this down. The pain of loss is always way more painful than the happiness of a win. Professional athletes do significantly better when they're trying to avoid a potential loss rather than when they're trying to win a game. This is especially true in golfing. This is often referred to as playing not to lose. Obviously, there are exceptions to this rule. You've seen some people choke and things like that. Some sport teams or athletes get on a run, late stage comebacks. But there's a reason like late stage comebacks are so interesting and exciting, because they don't happen all the time. Teams don't always have a comeback and end up winning, because then that would be the norm and it wouldn't be interesting and they wouldn't even have a word for it. It'd just be sports. So, there are exceptions to the rule, but generally speaking, these are the outliers. So to keep things simple, try to equate everything to utility points, right? And this is how game theory works. You just ascribe points to a win, points to a negative, points to a loss, and it lets you look on a piece of paper and go, well, this payoff matrix says I should do X, Y, Z because, I have a better chance of gaining some points than this way. And when you reduce complex issues to points, sometimes they become, a lot more obvious, like what the decision is, right? You take all the muck out of it.
Take the emotion away.
Yeah, you take the emotion away, reduce it to points. So imagine winning a weekend soccer game is a +2 of utility points, but losing is a -4 because you're obsessing the rest of the weekend, what you did wrong, why you didn't pass the ball, maybe blaming somebody else like I always did on defense because the midfielders won't run because they're so lazy. That's not in here, but yeah. Anyway, people didn't play up to their potential, blah, blah, blah. During the game, you're playing your heart out. Your team manages to get ahead by a couple of points. The mentality starts to gradually shift from let's try and score to Don't let these guys catch us and tie up the match. You're psychologically trying to lock in those gains rather than risk giving it back. Early in investing, some people will take bigger risks. Why? Because it's not real. They are gambling. And then what happens is, and I think Jerry and I have both seen this, all of a sudden your balance sheet goes up and you're not willing to give it all back. So you start to gradually play not to lose. And I think many of you have experienced this. And when you start playing not to lose, you just have to be careful and know that that's what you're doing, because the way you research, the way you rebalance, the way you spread out your investments, what you're willing to accept, your risk, all of that starts to shift because the gains become real. If they become life-changing, they become even more real. And so, and I'm not saying you should change anything about what you're doing right now. I'm saying these are all things, cognitive bias are all things you want to at least understand that they exist. Understand that they play against all of us. We're all experiencing these things. This is just a way to put them in little boxes and check like, oh, I'm experiencing this one. I'm experiencing this one. And the more you know when it's coming, the more you'll be able to counteract those statistical deviations that this kind of thinking creates. It deviates from prior thinking. The way I invest when I have $4 million in my account versus $40 in my account, those are different animals. And we also can't say, oh, I'll never change the way I think, because that was one of the other cognitive bias. We always change the way we think all the time. We're constantly meshing back and forth. So you can convert many decisions in your life, like almost all decisions, to utility points. Driving fast from Los Angeles to Las Vegas gets you there in about 35 to 45 minutes early. That's a +1 in utility points. You're there 30 minutes early. Woo-woo. But getting a $362 speeding ticket is a -4 in utility points. So if you're doing the math and applying reasonable logic and game theory, you'd have to make that drive successfully 4 times, avoiding law enforcement every single time to get the same amount of points as you would lose out of 1 ticket. So then you start thinking, wait, does that make sense? Now, if you could work out the statistical chances that you'd only be ticketed 1 out of 8 times, then there could be an advantage to speeding because you'd get all those extra hours. But you have to nail this 4 times. You have to drive over 100 miles an hour through the hills, past the cops that are waiting for you at the state line in Nevada, and you have to nail it 4 times just to break even. I'm on number 3. Right? Tomorrow, I'm going to bail out tonight. I'm going to put number 4 on the books. I've got a car with a matte finish. Hopefully, anyway, I digress. So you have to decide for yourself, what are the property utility points, plus and minus, for each outcome when you're weighing things to determine the greatest total utility. Game theory is about maximum payoffs among rational players. You consider yourself a rational player. And even if you're playing with irrational players, you're still looking for your maximum payoff, right? In the game. And a big complex system is just a bunch of little games. So this is the essence of game theory. Reduce all the possible outcomes to utility points. Write down all the outcomes on a payoff matrix. And that's basically just take a piece of paper, draw a cross in the middle. You have 4 quadrants. If I do this, if I don't do this, if I do this and X happens, if I do this and X doesn't happen. You can create, every game can be reduced to little bitty, tiny games and plus, minus. And if you do that, your decision-making, that even complex decision-making, gets very simple, or at least it's reduced to something that makes more sense to you. So reduce all the possible outcomes to utility points, create a payoff matrix, and let the math guide you. We can do more on this later. Actually, we could do a payoff matrix next week, and I can show you how it works. But for now, just remember that the pain, which is disutility of a loss in competition, profits, life, whatever, is much greater than the pleasure or utility of a gain. A win is a +1. A loss is a -3, meaning you got to get 3 wins to equal a loss. Meaning, again, do your research. Spend all the time in the beginning before you put $1 understanding what you're doing, so that when you do it, you feel confident in it, and it reduces the stress when that thing wobbles around. It reduces your emotional attachment. And that's the key. things like utility and disutility value and all this kind of stuff. These are all ways that we deal with the emotions that are involved in the investment space. Well, not just investments, like just in life in general. Okay. So apply this to the crypto market like I do, and you might start to formulate some simple rules you can live with. For example, I used to do 5X. So in 2017, when I was building this, kind of designing this in 2016, but I hadn't really seen huge gains yet. Early 2017, I started to see huge gains, XRP, XLM, Ethereum, well, even Bitcoin. I was buying it like $690. I think my first Bitcoin buy was $692. And I was like, I'm going to get 3 or whatever. I'm like, yeah. And I was like, oh, wow, look at, I was even price fishing back then. I was like, look how many XLMs I can get. So I got like 100,000 for like $1,000. And like everything was so dirt cheap. It may have been more than that. My total investment, my original investment was like 72 or $7,500 in late 2016, early 2017. By the end of that year, I had, it doesn't matter, more. I had more. And so I started saying, okay, I've got to figure out a way to lock in profit and not give it back, because in 2018, we all did. We gave a lot back. We all gave a lot back. We gave a lot back in the last couple weeks. Really in the last like 6 weeks, we've all given a lot back. But if you back out relative, we actually have made a lot. So anyway, 5X scenario, if a coin does a 5X, so I used to do 5X, and then I would take 25 to 50% off the table. So a big chunk. Why? Well, even my own personal development, I spend more time researching than I used to. I was early in the crypto space, and I didn't really appreciate what I was buying. I didn't have my game plan for buying protocol layer assets, things like that really worked out. I bought the top 20 assets in crypto, no matter what they were. And when they would do a 5X, I would axe 25 to half of it, no questions asked. That means I've locked in 125 to 250% profit. I took the rest off the table and usually just shoved it back into Bitcoin. That's always been consistent, because I'm okay being stuck in Bitcoin. I'm willing to be stuck in it. 2X in a week scenario. So this is if a coin doubles in value over the course of a week, I'm taking 10 to 25% off the table no matter what. I still do that. If a coin pops 100% in a week, man, I'm taking 10 to 25% off the table right then, that second. I don't care what the reason is. Right? Now, and again, that's kind of where we're at. So I would look at putting that profit back into work when the price retraces, or that kind of profit bouncing, cost averaging type thing. So anyway, we'll get into outcome bias next week. But Jerry, let's talk a little bit about have you experienced that loss aversion?
Oh, sure, absolutely. And for me, I had this long history, 2.5 years in this market. I was upside down, except for one 4-hour period in 2018. There was one 4-hour period where the market went up and I didn't capitalize on it. So yeah, so when in 2020 these assets started to go up, and I distinctly remember it was December 23rd. I know that I was right there, and I was like, I got an average cost of XRP at 42 cents. Got 130,000 of them sitting here in this thing. And I just read that Garlinghouse just posted on Twitter that they're getting sued by the SEC tomorrow. I said, and I loved XRP. I still do love XRP, but I mean, I was in it. And I just sold every single one of them. I said, you know what? I've just spent 2.5 years underwater. I'm finally profitable, and now the SEC is going to sue the entity that holds the controlling majority of the asset that I have all my money into. Bye-bye. Talk about loss aversion bias. I wasn't going to do it. And it was a great move. I've since bought back in. I still own some XRP, but the point is it's a completely different game now for me as a direct result of using that utility score deal, right? How many utility points do I get for being a a member of the XRP army in good standing on Twitter. 1, how much does losing $150,000 negative 25? I did some quick utility math, and I was not going to be underwater anymore. It was done. I was done with it.
So let me ask you this. You were done with it, not just because the lawsuit, but you were in a different position, because when all this lawsuit stuff happened, your account started kind of bloating, right? You had some other assets that were moving.
Actually, it was just around, it was November so a month before I had just gotten to break even.
So you were in break even or not yet?
I was a month before. I was in profit for a month when this news broke.
But you had been underwater for a few years, right?
2.5.
So would it be safe to say that when you finally got your head above water, your mindset had changed a little bit? Like, I don't know if I want to give it all back.
Exactly what happened. Matter of fact, I was committed not to giving it all the way back. That's why for the whole year of 2020, like, I didn't buy more XRP. I had what I had. That's what I had. And that's when I started branching off into Bitcoin and Ethereum and especially Cardano. And I'm glad that I did. I'm glad that I flipped the script. And all that was early stage loss aversion, right? It was like, okay, I'm 100% concentrated in this one asset. And, I had a little of this and a little, just scoochy. And I thought, okay, so 2020 was a year to flip the script on that, broaden the portfolio into assets that were completely disassociated with XRP. Bitcoin, Cardano, Ethereum, those had nothing to do with the XRP use case. And when the time came and it was like, wow, I had already had, 8-9 months of kind of an adjustment in my thinking that, I need, and I was glad that I did, because if you all remember the beginning of 2020, it sucked. It did. And then March came and everything really sucked.
It sucked the biggest
And the most. But then it started to come back. And by August, it was like, wait a second. We're seeing some movement. I think we had a 25-cent Cardano in August, and Bitcoin was getting up around 5-6 grand, 7 grand or something like that. I don't remember exactly, but it was like, all right, we're starting to see an uptick in this market. We went from a $200 billion total asset class market cap, started bouncing up, right? 350 billion, 400 billion. And it was like, oh, wow, now we're starting to get at levels that we haven't been at in a year and a half, 2 years. This could be the real changing. This could be that sea change in this market class. And lo and behold, it was, look, what are we at right now, Nick? About $1 billion, 300, something like that, $1.3 billion, yeah, almost $1.4 billion. Yeah.
Let's see. Where does it show?
And some of us are crying that we're at 5x bigger than we were in March of last year.
It's interesting. The altcoin indicator on CoinMarket on Cointelegraph Pro, I just noticed in this, it says it's only Bitcoin seasoned by 15%. That's pretty low.
What does that mean? It's only Bitcoin season. What does that mean?
Well, Bitcoin season, like, are people on the aggregate buying more Bitcoin or buying more altcoins? And normally that's like 30 to 40%. It's down to 15%.
So this is the least amount of Bitcoin relative to the amount of altcoins being purchased for what period of time?
It doesn't show. It's just kind of a relative price score right now.
Oh. And
it's got it down to 15%. But why I just thought that was interesting. And so basically what it is it's a measure of whether the Cointelegraph Markets Pro algorithm believes the current market conditions seem more similar to past times when Bitcoin outperformed or altcoins outperformed. When the indicator points more strongly to alts, current market conditions are more closely related to previous time periods when altcoins outperform Bitcoin over the following 2 weeks. So this is kind of measured in like a 2-week time chunk. And then when it leans closer to Bitcoin, the current market conditions are more closely resemble times in the past where Bitcoin outperformed alts over the following 2 weeks. So what it's basically saying is,
how do you gain that info? Like as an investor, and I have $100 with that info, I'm just going to throw this out. I could be completely wrong. It sounds to me like it would be more advantageous to put my $100 in Bitcoin. At that range. When the table turns, buy the alts.
Yeah, that's right. So once it gets to zero, however, it was like 30 a few days ago. So it's shrinking. Now, on the other side of that, usually those contrarian indicators are when you want to go long Bitcoin, right? So if it went into the alts, I would be looking to go from the alts back into Bitcoin while everybody else is looking at the alt. And they wobble a little bit. And eventually, I don't even think this will be a thing. I mean, some of these other assets with billions of tokens, in my opinion, it's pretty obvious that some other tokens are going to out market cap Bitcoin. I mean, Ethereum, more than 5 times as many tokens. So if it gets to 21% the price of Bitcoin, it's then overtaken Bitcoin's market cap.
Yeah, same thing with Cardano, 45 billion Cardano.
Yeah, and so yes, some of these other tokens are, and I think that would be good for the space.
So do I.
I actually think Bitcoin losing this market dominance thing, it doesn't detract from Bitcoin. It doesn't detract from what it means, what it is, a proxy for bad behavior. It doesn't change anything. It's just maybe we quit focusing on Bitcoin, 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 Bitcoin. Enough of the laser eyes and the Tom Brady's and the who gives a shits. And we maybe just focus on what does the future look like and how we're going to get there. And how do I invest to participate to outpace inflation, to protect myself against deflationary forces, and to have some proxy against bad government behavior, and at the same time benefit from all of the cool new technology and software that's going to rebuild the future, whatever finance looks like for us.
Do you have any stats on when gold became the lowest market cap of all the asset classes?
No. But like when the other market classes passed that kind of
like when real estate overtook gold, or when in the modern era when maybe the equity market overtook gold, or
I don't have any data for that, but I mean, even at the height of gold, what was it? 11 trillion was the very, very height.
That's my point. My point is the anchor of the monetary world, right? Of value was gold forever, right. And it has been the smallest market cap because people are willing to go further up the risk curve.
Right.
Right. I mean, look at the derivatives market. And if that doesn't tell you that we are a world full of degenerate gamblers, nothing will.
Yeah. We are degenerate gamblers with perverse incentives, and we don't care about the future, and we're willing to steal from our grandchildren because we want to have Ferraris right now.
What did my unborn great grandchildren ever do for me?
Nothing. They're not even going to remember. Jerry, if you build some massive fortune, they don't care about you.
Nope.
You know, that's a weird thing is, well, that kind of unpacks the whole idea about life and stuff, but no one cares about, I'm not leaving anyone anything. I'm setting up a trust fund for my cat. Kitty's going to have millions of dollars and human workers in a mansion filled with other cats. And the humans are going to have to come in and only speak in cat language. And I'm going to have an AI, a bunch of those AI dogs walking around. And they're not to herd the cats. They're to herd the humans that work for the cats. And I'm going to have AEAs, autonomous economic agents, working both on Fetch, AGIX, Singularity DAO. They're going to be making money for the institution of cat. And the institution of cat is going to be, anyway, you don't speak cat, you're out. You speak human speak, you're out. And the dogs will find you. It's going to look like Fahrenheit 450 Run, but run by cats.
Yay.
So those are my final thoughts. What are your actual final thoughts, Jerry?
My final thoughts are I I need to work on my mental state, my emotional and mental state. I'm conflicted between what I want and what I know I should do. Like, I want to buy a property and start the building process, but I know I should wait because I don't have the capital to do it right. And I won't have the capital to do it right till the market says I will, and the market's not agreeing with my timeline. So something's got to give, and it should probably be my expectation and not the market, because I cannot impact or enforce my will upon the market.
So you want to be rich now?
Well, I am rich now. I mean, I want to be filthy rich now.
Okay.
I mean, I'm rich now. I've never been this rich.
Okay.
I am richer than I've ever been in my entire life.
But let me ask you this. Is there a number where we would no longer see a Jerry on these shows?
No.
Good.
But the location from which Jerry is broadcasting would be different.
Oh, yeah. You'd be back in LA. I'm already trying.
I'll be back in my no.
Oh, yeah.
You know what I'm going to do?
I'm bringing Jerry back to LA.
I'm getting a drone. I'm getting some good remote equipment, and I am going to document the entire process. This is the bare land. This is how I acquired it. All the da-da-da-da-da. This is the blueprints. Da-da-da. Watch me build my dream. And I'll do it. Going to just throw it on my YouTube channel, just like everything else I do. I'll have guests come down. Hey, this is the Nick Black week on Casa de Bitcoin. Right?
Yeah, and then we're going to watch him just pour concrete for like a week.
Or put in the hydroelectric system at the waterfall.
But during that week, we're going to go visit every single restaurant
that accepts Bitcoin or any other crypto payment rail.
And brothel. And only because that's where the best food is.
It's where the very best food is.
Ambrosia. The food of the gods. Okay. We will see you next week. I'll post a link to Monday morning live show that I do tomorrow once they give me the link. So it'll probably be around midday. Have a great day. Stay out of trouble. Don't do drugs. Stay in school. Definitely don't do anything. My poor insolvent drunk, strung out on meth, high as a kite, smoking water, PCP, angel dust, crushed up Advil. She looks like a sugar cookie this morning. I'm like, Grandma, what are you doing? She's like, purple shoes. I'm like, okay. I don't know what that means. I think it has something to do with meth. I don't know. That's Grandma for you.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Profit to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the drop. I need some crypto, put it in my pocket. By any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey, you talking to the Prophet?
It's all fake news. It's phony stuff. It didn't happen.